watching CNBC TV 18. This is After the Bell. Before we take you through the headlines, we will talk about the Wipro numbers. Wipro has released its first quarter numbers. So the rupee revenue is on your screens right now. It's 13,700 crore rupees. We were expecting about 13,514 crore rupees. So a little bit of a miss as far as the rupee revenue is concerned. IT services EBIT has come in at 2,300. If I got that correct. So there you go. It's 13,700 on the rupee revenue front, and that's actually above our poll. We were expecting 13,500. So yes, on the rupee revenue front, it is above what we were expecting. And the margin has come in as well. Now, margin is quite significant. Margins have come in at 17.5%. We were actually expecting 15.9% this time around. Remember, this time around, we were expecting the entire impact of wage hikes to come in. So the fact that they have been able to come in at a margin of above 17% is a big positive. I'm trying to get the other figures as well. The dollar revenue is going to be very critical. And of course, the margins, the outlook as far as the guidance is concerned is going to be very critical. But yes, from the numbers that we have so far, it does seem to be a bit of a beat. I'm still trying to get all the details and the fine print of the numbers. So right now we have the IT services EBIT. We have the IT services margin, which is better than expected at 17.5% versus our expectation of 15.9%. IT services rupee revenues is at 13,700 crore rupees versus our expectation of 13,514 crore rupees. And we have the IT services EBIT figure. And I'm trying to get the exact guidance figure. We have the dollar revenue. We have the IT services a bit at 2,397. We need the dollar revenue as well. My colleague Rima Tendulkar is also joining in. Rima, do you have the details? I just have three numbers with me right now.
Oh, well, those are the only numbers that I have. But I think the margins have come in higher than what the CNBC TV 18 poll was. So at 2397, we are talking about EBIT margins of 17.5%. And this would compare with the 16% in terms of expectations. So at least in terms of margins, there is a significant beat, and that is important.
And this time around, we were expecting the entire wage hike to be absorbed as well, right? So it should have had quite a significant
the entire
impact.
Wage hike doesn't get absorbed in Q1. It gets split between Q1 and Q2. But Wipro has seen a very sharp deterioration in their margin. So in the last 4 years, EBIT margins for Wipro have fallen by nearly 850 basis points. It was closer to Infosys margins, but then it seems to have lost ground. So the margin improvement is a positive. 13,700 by way of rupee revenues and margins at 17.5% appear to be positive right now. These are the only numbers that we have. We await the important numbers will be what they've done by way of constant currency this quarter.
Yeah.
And secondly, what they have guided for. What the street wants to know is whether growth can come back to industry growth rates. But if their guidance is what, -0.5% to 1.5% or even 0 to 2%, given Q2 is also seasonally strong, it's unlikely that they will be able to catch up to industry growth rates.
Okay, while we go through the fine print, let's bring in Urmil Shah of IDBI Capital. Urmil, we have just the basic figures with us. We have Karan Tarani also joining in. Karan, Urmil, we have the IT services margin that is 17.5%, better than our expectation. Let me first get Karan into this. Karan, what do you make of the margins, keeping in mind that this was supposed to be a seasonally weak quarter as far as the margins are concerned?
Yeah, so we need to wait and watch in terms of what they give out for the margin details. There was obviously a salary hike this quarter, and there was also a positive impact of rupee depreciation. Probably the rupee tailwind has really helped the margin in a major way for Wipro. And if you really recall, they take the currency rate on the quarter end rate, and that is why the rupee depreciation impact has been higher for Wipro versus peers. That's what I believe is.
Urmil, same question to you. Would you take heart from the margins coming in better than what we were expecting broadly? Again, we're still awaiting the constant currency, the dollar revenue figure and the guidance.
Yeah, I would say so, because last 2 quarters there have been insolvency related even provisions which the company has made, and they have got back to the margin run rate which was there in Q2 of FY18. This would mean that the pickup in operational efficiencies is relatively better. So I would, on the face of it, I would say that the margin improvement is a positive surprise.
Karan, do you agree that Wipro is right now on track to get towards industry matching? Again, I understand we still need the exact fine print and the dollar revenue figures and the guidance, but is Wipro on track, according to you, Karan, to reach industry matching growth rate in the near term?
No, I think as per the NASSCOM, the industry growth rate is pegged at about 7 to 9%, and they are far behind that. I mean, given the guidance in Q1 of about we expect about 2.5% dollar terms decline because of negative impact of cross currency. Even if they grow constant currency by about decline by 0.5% or 1% odd, they are way behind in terms of achieving the industry averages. Even Q2 is not that seasonally strong, so we don't expect a guidance of more than 0 to 2%. Assuming they do a CQGR of even 2.5% on an upper end in Q3 and Q4, we would not see a growth of more than 4% odd for Wipro.
Urmil, your own expectations for Wipro's Q2 guidance?
Yeah, so our guidance expectation is also similar, 0 to 2%, and I agree with Karan on a full year outlook. We also need to keep in mind that they have sold out the hosted data services business, which will negatively impact the revenue growth in the second half. So even we are expecting sub 5% growth for the full year for the IT services business.
What could be the impact of on account of the sale of the data center business in Q2?
The deal has yet not closed, according to me. So we need to understand that. But a full year, on a full year basis, the revenue was in the range of 2.6 to 2.7. Of the overall revenue, 2.6 to 2.7%. So that is on a full year basis, that could be the impact.
Yeah, just a small mention over here. Wipro has announced a very tiny acquisition this quarter. They've just released the details. They will be acquiring Allied Solutions services. Allied Solutions is essentially a leader in technology-enabled health, wealth, HR and finance solutions. So it's a partnership wherein they are tying up with them and Wipro is taking in a portion of their business. Again, this seems to be a very niche acquisition in line with what Wipro has been doing over the last couple of quarters. Karan, a quick point as far as Wipro's strategy is concerned, in the long term, do you believe that these niche tuck-in acquisitions are actually going to work, or will it strategically over the long term be a bit of a negative with Wipro actually taking on so many various deals?
So if you see historically, Wipro has been one of the most aggressive in terms of acquisitions.
Yeah.
In fact, the organic growth for Wipro has been extremely weak versus peers. And if you see the history in the last 3-4 years, they've done multiple acquisitions, and that has contributed to the growth by about 2-3% every year. And despite this inorganic growth, they've been unable to grow in line with industry averages. So what I feel here is that there is a problem in the scalability of these small acquisitions which they are doing, and probably they're not benefiting much in terms of the overall growth strategy.
Urmil, what's your expectation as to when Wipro can reach industry matching growth rate?
So we believe that for now we think in the second half of FY20 is where we believe they could get back to 8% plus growth on a YOY basis. So till that time we are expecting them to grow lower than the industry.
What is that contingent on? Because for the last, say this year as well, you're saying growth, Urmil, will be less than 5% or close to 5% for Wipro. Even in FY18, the company just had a constant currency growth of 2.9%. In dollar terms, it was a growth of 4.6%. So what's giving you confidence that the company will be able to see a growth of close to about 8%, which will be similar to that of the industry by FY20?
So we believe that the verticals which had been in the previous 3 to 4 quarters, that is energy, utilities, as well as communications and healthcare. We believe that these the headwinds from these verticals should on each of the verticals, by end of the year the headwind should nullify, and we believe that as a result of it there is a very good chance that in the second half, which is generally stronger for Wipro, they should be able to get back to 8% plus kind of growth.
Okay, we are still awaiting some critical numbers. So we still have just the 3 points on IT services, EBIT as well as margin. So prima facie, Rima, very quick take on what we make of the numbers so far.
Well, prima facie, it looks like a good set of earnings, but a lot depends on the company's growth, because that is where it's been lagging compared to peers. As we highlighted, even last year, the company just had a 2.9% constant currency growth for the full year. So, growth has been missing for Wipro, and it's trading at a discount to peers. So, for instance, it's trading at a PE multiple of 13.5, 14 times FY20. Versus, say, a TCS, which would be closer to 20-21 times. So it's trading at a sharp discount, and the key reason is because growth has been lagging for the last so many years now. So for Wipro to catch up, it needs to see a pickup and an acceleration in growth. Yeah. Q2, if the company's guidance is just at 0 to 2%, if they guide for that, then we'll assume that the company growth is going to be closer to 1%, which again is likely to be short of the industry growth standard. So await more details, but for now, the numbers that we have appear to be a beat.